In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical monthly demand and support area. And by the way, before I forget, take a second, pause the video and read the disclaimer. Now, let's get right into it. So as I was saying, here in the monthly, the market is testing a very strong historical monthly demand and support zone. Every single time the market tested the zone, it rejected to the upside very aggressively. We had just one fake breakout to the downside. Immediately the market broke back above and continued respecting the area as support. Right now we had yet another test of the exact same zone, and the market is actually already in the process of rejecting the zone to the upside. And a more bullish price action could be expected, as already happened in the past when the market was testing this exact same zone. So here in the monthly, everything is quite bullish. Let's drop down on the weekly time frame and see what we have. Now here in the weekly, we had a perfect inversion of trend. The market went from the creation of weekly lower lows and lower highs, so clearly a bearish market from a weekly standpoint, to now the creation of weekly higher highs and higher lows. So we had a perfect inversion of trend from a weekly bearish market to now a weekly bullish market. We can notice how the last move was the creation of this higher low, new higher high. Now we're getting another correction. The next logical step would be yet another potential weekly higher high. Now, if we drop down on the daily time frame, what do we see? Now, here on the daily, this is where things start getting quite interesting, because we can immediately notice that all this area was acting as previous daily resistance and it now is acting as support. We can also notice that we have a strong impulse followed by a correction. And if you want to measure the correction after an impulse, you have to take your Fibonacci from the low to the high of the impulse leg. And this shows us how we have the 0.32, 50% and 0.618 Fibonacci retracements all lining up exactly at this previous resistance turn support area, therefore creating a confluence of support exactly at this zone. I also spoke about GBPUSD just a few days ago when the market was around this area, and I explained all the reasons for which I was expecting this rejection to the upside, which is in fact exactly what the market just gave us. And you find that previous analysis either here in TradingView or on my YouTube channel. I don't remember on which one I posted it, but you can easily go and check it out for more free education. Now, as this area is confluence of support, there is an increased probability of seeing more institutional longing since it is a confluence of support zone. So let's go and see what institutions are doing. Well, if we're looking at the data for the GBP, the first thing that we have to keep in mind is that if we are looking at the data for the GBP, we're actually already looking at GBP USD, because all currencies on the spot are traded against the USD. And we can see how net positions went from 6.5K all the way up to 23.9K, showing how institutions have been moving back to the bullish side for the GBP, therefore to the bullish side for GBP USD. So let's keep that in mind, that institutions are already positioning back to the bullish side and move back to the chart. So in a situation like this, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you enjoyed the video, make sure that you click on the boost button. You also find my free Telegram channel and all my platforms linked in the relevant section below the video. For any questions, let me know in the comments below. Also, new pairs that you would like me to cover, and I will see you in my next breakdown.